Hi and welcome to the Market Alert for Monday, the 6th of February 2023. So January payrolls, this is the NFP numbers, explode to 517, 8 sigma beat to expectations, unemployment rate tumbles to record low. Wow indeed when these numbers came up, and then of course they did the revision. And the market took off to the upside initially anyway for most of the session until the stocks and bonds tumble after lava hot jobs report, super hot NFP, strong ISM services, plethora of hawkish and ECB speak. Every day they're changing this, aren't they, to whatever they want, however they want to interpret it to actually move stocks to the upside. However, I think we're due for a correction. And there is no major news as far as I can see this week to talk of. I mean, Powell's out or whatever, but there's no major economic news. So the markets are totally broken. The last time we saw this occur was just in time for the August reversal. And Nasdaq soars to best start since 1975 after J and jobs outperform to the moon. When we start getting headlines like this, you know that it's just designed to suck in all the traders. So again, I will say that there's potentially a correction in the pipeline, and then certainly FTSE reaches all-time high, which we've been looking at for weeks in the alert and forecast in there, and the market is now hit it. It did it on Friday as the NFP number. So now it's made its all-time high. It's likely to have a pullback, which used to be the normal pattern of events. Economic news, nothing today. Absolutely diddly squat. Tomorrow we've got Powell speaking at 5 p.m. FOMC member Williams is speaking, so they're wheeling out the Fed members. That's on Wednesday. There's a few other things on Wednesday. Also, you've got Waller speaking there as well. But there's not much on the economic news, as you can see. We've got economic forecasts. We've got monetary policy report hearings at 9:45 on Thursday for the Bank of England. And then, like I say, there's not a lot this week, so the market's going to have to make up its own mind. And it's likely to be more on the downside, I would have thought, than on the upside, given the fact that the speculation of a Fed rate hike next time, I don't know when that's going to be, will be more than 25 basis points, but we'll just have to wait and see, won't we? Okay, let's have a quick look at the implied volatility. And on Friday, we saw this drop down to 1503. So we're still down in these lows, as you can see there. Going back to the August sell-off that they talked about, you can see that was the case. That sort of preempted it. So down in that sort of 14% area, and down she came. Then we had the doubling of implied during this move from there to there, and then the market stopped at its run, and it's been making its way down ever since, and now back to those lows. And the best thing to do is to have a look at it on a 12-monthly chart, and you can see again we're down in them sort of areas there where the market is likely to make some sort of correction. So the Dow's struggling to move higher, unlike the DAX and the FTSE, which has really powered ahead. But I think that's coming to an end as well for the time being. So there we go. It is a precursor, and you can see that down in those lows there is likely to be some sort of corrective measure in the markets coming over the next few days to weeks. So let's have a look at Friday's activity, and we'll kick off with the Dow. So in the Dow, when you look at this, you wouldn't even know that the NFP numbers have been out on Friday. Certainly the market closing back below the 5-bar moving average, but also a similar range to what it was on Thursday. So let's have a look at the 30 minutes. You can see the reaction initially. They moved it to the downside. What a surprise. Straight down to the low, and then brought it back 100, 200, 300, nearly 400 points before it was then at the high and then sold off to. And again, I'm going to reiterate, the high and the low of the previous day are so important for traders, as can be seen by this chart. Market also approaching Friday's low at the moment. Will the market bounce off this and get back to the high of Friday? I very much doubt. But watch this area, because you are likely to get a bounce off this area and then trade back up towards the close and any other sort of resistance before then attempting to move back to the downside there. In the German DAX, inside bar for Friday as well, which is very interesting. Down on the overnight as well, just sitting on the 5-bar average there. And we've got the market sitting at 38%. Any sort of retracement will be down to this sort of level here. This was the powerhouse from the 3rd of January all the way through January, moving the market up in that parabolic move. But since then, it's traded sideways and then just moved higher on this news. So if you just look at it that in a logical way, you'll say, well, what have we got to actually move this up now, given that the market had to sit sideways for weeks waiting for the Fed to make a decision on interest rates and the non-farm payroll numbers, just to move it up that few extra points. And then you can see the weakness already starting to come in there. In the 30-minute chart, this sold off on Friday morning and then went back down, retested in this area, creating a double bottom, and then the market bounced with the Dow and then has now come back down to the low. So very important again, if there's any bounce off this, you want to look at these areas of resistance for the market to struggle and then move to the downside. But the daily chart is certainly showing, like I say, apply logic here. We ran all the way up through January. We got sideways where there's indecision on where will the Fed raise rates, how much will they raise rates by, what are the non-farm pay numbers going to be. And once all that's out of the way, you can see already there is a weakness in the market. And the implied volatility is down in those lows as well. In the S&P, similar picture, the market down on Friday as well. As can be seen here, we went down, we went all the way back up, and then we came all the way back down, sitting at the low. Same thinking as we've seen with the other markets. In the FTSE 100, as I say, we put in a new all-time high on Friday. That's sitting at 7913. Look at the monthly chart. We've been watching this for weeks with that 7903, and the market went through this by 10 points during Friday's session. So there's your new all-time high in the 30-minute chart. You've got the DP there, not anywhere near the low yet, but it wouldn't take a lot to head down to that. I have no idea what made this market move like this. I think they just saw the opportunity. Friday, they got the excuse with the non-farm payroll numbers, and they moved the market to the upside on that interpretation of those numbers, which is absolutely insane. I nearly swore then. Absolutely insane. But I don't need to tell you that. You can see it for yourselves. It's just utterly bonkers. It really is. So, yeah, there's your new all-time high in the FTSE. And there are your potential retracements. Again, you can see how it traded sideways. We've had all of this, through January. And this is just, hot air. I can't see how it can maintain any upward move on this when you actually sit and think about it logically. But to never say never, because the markets, doesn't matter how logical your thinking is, it's soon disproved when the market opens and it moves back to the upside. So, like I say, but that's, again, if you apply the logic, that's what in theory should happen. And I say in theory. Meanwhile, in the GBP JPY, the market putting in its retracement there. We can see that we're down at around a 78% retracement, bang on at 78 there. Market bouncing off this at the moment, so let's see if we can get some support off this. It's going to be dollar dependent, of course, in order to do that, but we're up on the overnight at the moment. Friday we were sideways, we then moved up, got back above the low, through the DP, all the way back up, and you can see with the overnight in Asia, the market has actually gapped. It's not been filled yet, so it'll be interesting to see if the market holds above the high or it comes back and actually fills the gap there. In the pound, this came under a lot of selling on Friday because the dollar spiked up with those numbers indicating that there could be another big 75 basis point rate rise next time round. Well, it's a long time before we get to there and it'll be forgotten about. But the dollar moving up on Friday, taking out any longs in the pound, as can be seen here with the market action. And you can see also that the mission accomplished because it's gapped down on the overnight and now starting to make its way back to the upside as your small gap down and then moving back above Friday's low. There's the the sell-off in the pound with the non-farm payroll numbers. And in the US dollar, this is what I was talking about. There's the market's reaction to the NFP numbers and the market continuing to move to the upside. This had a major impact on the metals market, so let's have a look at this from Friday. So in silver, I'd mentioned on Friday that the market struggled to stay above that $24 per ounce level. And there you can see that that sideways move has broken to the downside. I took 650 million ounces of futures contracts to move the market down $2 on Friday. So it's actually quite strong and actually going against the grain of where all of the other slams over the years have been, where it just continues to move lower. So very interesting that this market's trying to hold on the overnight. And if you look at the 30-minute chart, this was the 650 million ounces of futures contracts, just a con job, just to shake out all of the longs, get it away from that $24 resistance area. And there you can see the market trying to make its way back and stable on the overnight. Same for gold as well, absolutely hammered during Friday. They want to keep this below the $2,000 per ounce. And what you do is you get some news like Fridays and you just absolutely smash it with tens of thousands of contracts, paper contracts, got nothing to do with the physical market, and demanding the physical with central banks buying gold like they've never bought it before. It doesn't even reflect that. They were told, get that price down so we can buy it cheaper in the physical market. So that's what happened there, and you can see that the market is coming off. It came off Friday's low, but a bit of weakness there at the DP. But it'll make its way back because given the economic climate, what else is there? So we'll just wait and see. Okay, so there's a roundup of what's happened during Friday. Nothing this week apart from Powell speaking tomorrow at 5 p.m. So the market's going to have to make its own mind up. It'll be interesting to see how much impetus it's got on the upside now, given that it needed 500,000 jobs and a 25% basis rise in interest rates to actually move it up. So if there's nothing like that coming along this week, then the market's going to have to make up its own mind. But it's due for a correction, as the implied volatility indicates. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.